Hello everyone, this is your simple tax assignment. We're going to run through an example here with some fake receipts, not your actual assignment receipts, but some fake receipts as we're going through as kind of class notes, just to kind of take a look at how this is all going to come together. Now, with this assignment, first of all, you're going to use a fake SIN, single person, born in 2001, Alberta, no dependents. We'll kind of run through this, but this is important. Do not actually submit your return to the CRA. Save it as a PDF, and you're going to submit the PDF to Mr. Dunbar. This is not a real tax receipt, so we're not going to be doing that. So let's just run through what this would look like. And essentially, you're going to do this, except you're going to do this with the other receipts that I give you for that tax assignment. So as this loads up, we are new to Simple Tax, and we're going to start without an account. There was a video there that you can watch, but we're not going to need to really worry about that. We're going to enter in that fake social insurance number that we got. It's randomly generated, and the assignment told us that we could be born anywhere in 2001, and so we'll just pick any sort of date here. It is not a deceased person, and we do prefer English. Your mailing address you're going to need to put in. In City, Alberta. It doesn't really matter here what's the postal code. We'll leave this blank, and so just our mailing address is in there. For this assignment, put in your real name, but your other information that might identify as you, please just feel free to use fake information, because I don't want you to be put in there. Now, you are in Alberta, right? You live there as of that date. We currently live in Alberta. We've always lived in Alberta for the purposes of this assignment. We can also just toss in a yes there. For the purposes of the assignment, we are single, has not changed, and we have no dependents. Also, we do not own foreign property. A lot of these other things can be left blank here. You can fill them in if you want. Yes. Do we want to, if we are a Canadian citizen, we can even get ourselves put onto the electorate person, the National Registry for Electors. So this would be a registry for voters lists. And yes, we are going to apply for this incentive and notice $444 refund already. Now, we do not want to sign up for the CRA because we don't want to submit anything to the CRA. So, we have 0 qualified dependents. We'll say yes, that is correct, because we have no dependents whatsoever with the Climate Action Initiative. So we're going to now need to add in our tax reforms. The first one is the T4s. Now the T4s are basically statements of how much money you've made. And so this here matches the first T4 that we've got here. Now, according to these fake T4s, we worked in 2 jobs. So Sam's Shoe Store. And again, we're doing this for Alberta. Made $2,600. Had $44.98 and 7. Okay, so we've now entered in our 2 T4s there with all pertinent information. If there was information in other boxes, we would definitely fill that in too. We're going to add something else here, and the next thing we're going to add is our donations and gifts right here, because that is our next receipt here from the Foundation of Calm for $300. And so that's what we're going to put in. It was a charity. And again for $300. Now, if you saw within there, we don't have any unused donations to carry forward from prior years, because we could use anything for the last 5 years up here. But we've just got the one receipt. And really, in the case of this particular set of assignments, we'd probably be best just to carry it forward. But we're just filling it in. Donations, gifts, so yeah, you can use up to the last 5 years. So you've made contributions to your RSPs, including repayments to your home buyers plan or lifelong learning plan. There are 3 things that you can take money out for RSPs for. The first one is for your home buyers plan, where you take out, and it's a plan for a first-time home buyer. Second one is a lifelong learning plan. You can use RSP investments for lifelong learning, and both of those you can repay them without having to pay tax on the withdrawal. Or for income, usually in the place of retirement, but in this case, we're not going to do it. Now, the deduction limit is always going to be 29%. Usually you get a statement from previous years. Because it is new, we're not going to need to worry about that so much, and we're going to enter in 29% of the income that was in there. Did we make a transfer? Well, yes, we did. We did make a transfer. That was for $500 in the Calm Investment Incorporated. So, type of contribution, it's just one of ours in the major amount, and Calm Investment Inc. And we did it for $500. You can add other contributions here if they are, same as you can add other donations here. You're just putting them all in. But according to this, we're not using any of this for that. We've got 500, and we're going to put this into optimization. So we've got all our receipts in here, right? 2 T4s, a giving receipt, and an RSP receipt. And so now how do we get this into a PDF, because we don't have anything to submit? Well, we're going to need to check and optimize. Do we have any previous returns that we're doing right away? No. Do we agree to the terms of service? Yes. Will we want to save it? No, we won't want it to save. And here, don't press let's go. We don't want to submit. We just simply want to save as a PDF. So we save it as a PDF, and this is the assignment that we're actually putting into Mr. Dunbar. It really is that easy. Let's take a look at what this tax receipt. Now, 28 pages, it does seem like a lot, but most of this is going to be blank. If we were filling this out by paper, this is all the paper that we would have, but we're just doing this as a PDF. Information including where we live, your SIN number, birthday, English. It's not a dead person, we're single. And if we had ticked 1 or 2, married or living in common law, we would enter in our our partners or spouses information here, because there are benefits and drawbacks to having the taxes filled together. However, if you try to get around it by line here, remember you can be audited for up to 7 years in the past, and the CRA has the entire budget of the federal government at his disposal. So it's probably best just to tell the truth here. Information that we filled in about elections, Indian Act, foreign properties here, and we see total income. It was $6,200, and a whole lot of blank stuff that didn't apply to us. Total amount of income, $6,200, and more stuff, and again $6,200, and more stuff, but ultimately $6,200. It auto-filled it for us by answering the questions. Here we've got the deductions. Start off with the basic claim of $12,069 plus what we paid in EI, Canadian employment amount, lots of other things that we can put in here, but take that amount times 15% ultimately gets us $2,008.72 in deductions. So with $6,200 of income, we would be paying 15% of that, or $930. Notice that if we make more income, you're taking more of a percentage. But the amount of tax that's added here is just the amount previous. So this is just 20.5% on every dollar over $47,630. And this is 26% on only every dollar more than $95,259. But we should have paid $930 in taxes, but we've got $2,008.72 in deductions, means no federal tax. Now you may have recalled, we did pay tax, right? From Sam, he held back $101. Dan's Vegan Emporium held out $121, and so this form is going to get us all that back. And we see it eventually, all that money there, plus the Climate Action Initiative, means that we get $673.76 back. So what are the rest of these forms? So that's 9. We've got some other pages. Well, the first one is our RSP contributions, and this will be contributions that we can do to reduce our taxes in future years. All right, so we took no deduction now. We'll take a future deduction. Okay. Canada Pension Plan forms. Because we had overpaid a little bit, zero, right? This was all just self-employment income, wasn't relevant to us. Here we paid $220.90 in tax. However, winds up being zero amounts that we have deduction for CPP contributions. We could have donated as much as $4,650 of our income here for taxes, but reality is that we're not needing to use any of it. Which means even though we had that $300 receipt, really probably would have been better for us to hold it off for future years. Climate Initiative calculation, base amount is all we applied for. And then we've got the Alberta taxes. But through everything, reality is that we owed nothing for Alberta tax. And this line actually winds up going back into our Canadian tax return. Employee insurance overpayment, $6.82. And we did not need to worry about this, and a claim of 0. And that's the tax return. This is PDF, is what you'll be submitting to me.